Before you give anybody your money to invest for you, can you just take a pause? I just listened to how someone lost a huge sum of money, and it was really a painful one, and I felt I actually need to talk about this. Perhaps there are people who are in the middle of making some investment decisions that this might help. So listen to me very well. Don't transfer. Don't rush until you listen to this episode. Don't let anybody tell you that there is a business opportunity that you need to put in your money now, and that if you don't, it will close in the next 24 hours or 2 days. Don't let anybody cajole you into that. Because that is how some people have invested their money and they've lost everything. The money has traveled to a journey of no return. And the truth is, some of these business opportunities will not only take your money, they may also take your peace, your joy, and even sometimes your health. It doesn't have to get to this point. So that is why you need to listen carefully to this. So, welcome to Financial Intelligence Hub, where we make finance simple, practical, and sometimes painfully true and funny. And one of such is today's episode. So what should you do before you make investment decisions? That is, things to look out for, things to check out for, things to be on the lookout for before you invest in any business, any opportunity, any idea, any proposal you receive from anybody, either family members, friends, or even the companies we see around us or businesses you see. What should you look out for without wasting much of your time? Number one, you need to understand the business. Understand the business. There is no two way about it. You don't invest into what you don't understand. If you do so, you are not investing, you are donating. Listen to that very well. You cannot invest into what you do not know. It is like investing your time and your resources into a relationship you don't know the person you are dating or in a relationship with. There's a lot of risk involved. Recall, a lot of us lost huge sum of money during the Ponzi schemes of the MMM because people are doing it. People are putting money. People are getting quick returns, huge returns, and we do not really try to understand what are they actually doing. It's just a matter of time before everything comes to open. So please and please, can I beg you, before you invest into any business, any company, any idea, any proposal, understand the business. Now, what are the questions you should be asking? You want to ask, what do they sell? What are they selling? Is it a physical product? Is it a tangible product? Or is it a service? It has to be something. They have to be selling something for them to make money. So ask them, okay, what are you actually selling? What is your product? What are you offering? And who are those paying for these services? Who are those paying for this product? Who are your customers? How do you make money? How do you generate profit? These are some of the questions you actually need to ask. What are the problems they are solving? Every business is existing to solve a problem, whether existing problem or a new problem. So if you are investing into a company that you can identify what they are, the problem they are solving, the customer they are serving, the market they are operating in, the products they are producing, or the services they are offering, and you invest in such a company, just forget about it. You need to really do your research on the business, on that company you want to put in your life savings into. So please remember, understand the business. Don't invest into what you don't understand. And if you ask them those questions and the explanations they are giving you is confusing or it doesn't add up, my brother, my sister, run for your life. I didn't say walk, run. Second point, now you understand the business, right? What they are into, the customers they serve, how they make money, the products they offer. You've understood all of these. Things you want to watch out for is check the people behind the business. Every business or company is the reflection of who is running it. Take that clearly. Every business or company is a reflection of who is behind them, who is running it. A good business with bad manager is as good as a bad business. While a fantastic business idea in the hands of confused people becomes a disaster. Do you get it? A fantastic business idea in the hands of confused people, it becomes what? A disaster. And the last one I'm going to mention here is a simple idea in the hands of a competent individual, a competent team or a person is a gold mine. A gold mine, a precious opportunity. You can see the difference. That beyond the business itself, you need to check the people behind the business, because that will also speak a lot about how your money will be used and how that your money is coming back to you or is gone for life. Take note of that. It may be a great idea, but if the people behind it are bad or are not competent or are confused people, your money will be confused as well. So take note of that. Check the people behind the business. So what are the questions you should be asking about the people behind the business? You want to check their track record. Do they have a track record? If they have been in business for a while and are just looking for investors or partners, you want to check their track record. Have they done this before? How have they delivered in the past to people, previous investors? Do they give back to investors? Check their track record, check their past performances. Now, do they have the right skills and competencies to run this business? Check their reputation. Is it the kind of people you want to be dealing with? You want to find out all of this. Their honesty, their consistency in whether they deliver. There are some companies that they are looking for investors or partners not because of the fact that they need your money, but because they just want to hide under the fact that they have some people investing in them. But meanwhile, their reputation is not actually good. Meanwhile, they have a different ulterior motive. One of them is people laundering money and setting up a business to clean the money and putting it into the back of the system like a clean money. So you want to do your research about the people running the business. If their story keeps changing, my brother, my sister, bera, like, run for your life. When you talk to people, founders or startup owners or any person with a good business idea, and they lie about something as little as their age, their work experience, their past experience, my brother and my sister, they will not tell you the truth about your money too. That is just it. If somebody approaches you with a business idea and they're trying to get to know them, basic things like their names, their age, their past experience, all those basic information, if it doesn't add up, if it is full of lies, just know that they will never tell you the truth about how your money is going. So that buttresses the importance of checking the people behind the business before you invest your money. It may be that tailoring business, that laundry business, that car wash business, it may be even preschool business, after school business, all-age business. Think about it. Whoever approaches you with such kind of opportunity or business idea or whatever, think carefully. Understand what they are trying to do. Understand their products, offerings, and beyond that, understand the people behind it. Now, I assume you've checked for the first two. Another thing you also want to watch out for, which is the third point, is review the numbers. Somebody is approaching you to bring your money to invest, right? You want to ask for a record of their performance, past performance, and even current performance. You want to check numbers. You want to check sales. How does it make money? Do they actually make sales? Do they actually sell? How does it pay for its expenses? How does it pay its debts? If the company or the business has debts, how does it pay it? How does it finance all of this? How does it generate cash flow? Because it is possible for a company to be selling and there is no cash at the end of the day. It is possible for a business to be selling and there is no profit at the end of the day. So revenue or sales does not always or does not necessarily have to translate to profit, and profits at times does not necessarily translate to cash. Take note of the difference. There is a difference between sales, profit, and cash. What you should be most concerned about is the liquidity of that business. When we say liquidity, how well is able, to meet its expenses, its obligations, meet its responsibilities. You need to ask those questions. Those are the numbers we're talking about here. How do you finance your operation? How do you keep going? How do you keep funding your business? How do you make money? How do you pay expenses? How do you repay debt? How do you manage your cash flows? You check the records. You don't need to be an accountant to be able to check all of these basic things, because we've not gone granular. We've not gone to the details. You've just asked, how much have you made this month? Or how much have you made this year? How much have you made in the last 2-3 years? Then what is your expenses like? Your burn rate, what is it like? So you need to know how sales is translating to profit and how profit is translating to cash. If all of this doesn't add up and they are telling you that don't worry, everything's going to be fine. They're telling you this is a great business idea. Trust me, believe me, it's going to work out well. My brother, believe in God. Don't believe in that business. Don't believe in that business. If they cannot show you the numbers, if they cannot show you where cash is coming from and where cash is going, if they cannot show you how they are paying for debt and their other obligations, do you think they will show you how they are using your money? Do you think you will even see the return of your money? Remember I said, some investment or business opportunities does not only take your money at times, it even takes your peace. So for the sake of your peace, can you do the right thing? The next point, it is very important. Beware of too good to be true return. Beware of too good to be true return. This one is very simple, and a lot of us are falling victim of this in the past. And even currently, it's so unfortunate that even past experiences, some of us have not learned from it. It keeps resurfacing and reoccurring. I've seen businesses open, collect people's money, and in few months or few weeks, they close down, nowhere to find them. I love I could share my story, but I guess that is for another time. If the return is too sweet, if what they are offering you as if you bring your money, you will get this in return. If it is too incredible to believe, it is suspicious. And once it is suspicious, what does that mean? It means run for your life. Can you imagine someone promising you 50% return in 2 weeks, 25% in 2 weeks, if you invest your money in one particular idea or company? Do you think that is an investment? That is not an investment. Don't be deceived. Who turns around money within 2 weeks with 30%, with 50% return? Do you think if such exists, all of us will be here? Do you think if such exists, even you yourself, even your president will not be bothering being there? I could literally just invest and just wait for 2 weeks to get return. Do you think all the banks will bother, or your bank manager will bother? They won't bother doing bank manager job. Everybody will just sit at home and just keep investing. So if you see anybody offering you such, just take note of something. It is a scam. They may have shown you results of how they have been paying people. That is their approach. They rob Peter to pay Paul. They have done their forecast. How can we do this? How long can we sustain this? If we collect people's money, how long can can we use it to repay people, the first investors? So they will create that system to make it work for a few weeks or months, to create credibility, to get buy-ins from people. And once that is done, then things open up. That is essentially what they do. It is not sustainable. I'm here to see any business at all that will give you 50% or even 30% in 2 weeks and we still remain. I don't know why we still keep falling victim into this kind of scams. They are still everywhere around us. Ponzi schemes here and there. Every time it keeps coming up. One goes, after a few years, another one pops up. It's so painful that some of these businesses are even being endorsed by celebrities, are being endorsed by well-known companies, or have partnerships with well-known companies. And because of that, you think you can just go ahead. Do your research. Do your due diligence before you go ahead. Okay? Don't do it. If you invest into such investment that is too good to be true, it is not an investment. It is not an investment. What do you call it? It is a crime in progress. It's a crime, sorry to say. Because I don't know what kind of business they want to invest in to provide such returns. What it means is that at the end of the day, a lot of people will lose their money, life savings. People go into difficult situations, financial challenges. Some people may never even recover from it. In our first episode, we spoke about getting your financial affairs in order. Now you've gotten your financial affairs in order. You have managed to save up. And now you want to begin your journey to that financial freedom, which is essentially allowing your savings to reproduce itself, which is through investment. So which is why this episode is important. That before you put in your life savings, that you need to watch out for all of these things. Whether it's a new business or established businesses. It's kind of easy with established businesses because there's track record, because their information is public information, because the information is public, it's out there. Take for example, you're investing in companies like MTN, investing in companies like Dangote, investing in companies like Nvidia or Tesla, Apple, Microsoft, Okomo or Presco, or just mention some of these, so all these companies. It's because they have a track record. You can check them out. The information are available to the public. There are even fund managers, there are investment managers that are available to help you even do this if you don't want to do it yourself. Do you get it? So it's kind of easier with investing in those kind of companies because the people behind them, you know them. And beyond that, they are well regulated. They're a regulated business, especially the listed ones. But that is not to say that some of these companies do not fail. That is not to say that some of these companies also take money and never return the money back to the investors. Take note of that. Some of these companies have taken investors' money also and never returned anything to them. And that is why, as part of investing, you need to know when to go in and when to pull out. You don't just give your money to someone, an investment manager or a fund manager, and just slips off. Or if you're the one doing the investment yourself, you don't just invest and just lock up. It is important that you keep monitoring, you keep tracking, so you know when to do more, invest more, or when to reduce the level of your investment, or when to even withdraw finally. So please be guided. When anybody approaches you with an investment offering you returns that is too good to be true, see, you know what they call jackpot? That's wrong for your life. The fifth point I would like to talk about is check the risk. Check the risk that is associated with investing into that business opportunity, that idea, or that project. Check the risk. What's the risk? Asking your question. What can go wrong? What can go wrong? That question is so important because asking that question will enable you know if what you are investing is too big or is too risky for that investment. Every investment has risk. Life is full of risk, by the way. So why is investment different? Crossing from this side of the road to the other side has a lot of risk. Sleeping and waking up has a lot of risk. Entering that relationship with that person has a lot of risk. So why is investment going to be different? Investment also has a lot of risk. But the kind of risk you want to be making is a calculated risk, not just anyhow risk. A risk that you understand everything about before you even go into it. Okay? Even if you bury your money under the ground or you put it under your mattress, there's a lot of risk to it. In this age of where there's rat, there's termites, there is snakes swallowing money. The money is not safe anywhere. So wherever you put your money, investment or whatever, there's risk involved. But you want to ensure that the risk you are making is within your acceptable and tolerable limits. So ask yourself, if this money disappears today, will I sleep well? If this money I'm investing in today disappears, will I sleep well? If the answer is no, reduce it. Because what it only means is that that money is too big and risky for that business or for that investment. Except there is an appropriate or sufficient level of safeguards. Otherwise, reduce your exposure. Another thing is, if a company or a business has unclear risk, trying to get somewhere, because you are trying to invest into a business, a company, or someone's idea or innovation, and you are trying to understand what the risk is, what can go wrong about this business, not just the money you are putting in, the business itself, what are the risks it faces? Because if the business faces risk, your money is also facing risk. So if a company does not have a risk register, or they are unable to explain to you in clear terms what their risks are, there are no safeguards, there are no plan Bs, my brother, your money is the backup plan. Please be guided. Because if you don't know the risk, if there is no clearance, there is no clarity on that part, there is no safeguard, there is no plan B. If something goes wrong, how do we continue in business? How do we keep producing and meeting the needs of our customers? How do we keep responding to our investors? How do we keep producing returns or returning our investors' capital? If there is no plan around this, your money is the plan B. The last point I would like to make, which is the point 6, is for you to check the legal structure. If a formal business, you want to check, is it registered? Does it have proper agreement? This is so important. Proper agreement, written documents. It is so important. If every agreement, everything they do is just by verbal or handshake or just by verbal form of agreement, be careful. Because if anything goes wrong, anything verbal, anything of such, may not hold in court you. Because this is very common in startups where the founders don't even have proper agreement with people they are dealing with. Founders and every partner, they just go ahead and start a business. There is no proper documentation, no proper agreement in place. Who owns what? What happens if this person exits? What happens if this person decides that he wants to pull out? There is no agreement. There is no proper documentation. And now they are coming to approach you to come and invest, and they've not shown you any of this. Be careful. Don't do it. Above all, where necessary, engage professionals. There are a lot of fund managers, established investment managers out there. If it's something you can do on your own, if you are experienced enough to also manage your investments, good. If you follow these 6 steps, I have tried to summarize this because it goes beyond this. In the world of M&A, this might be called financial due diligence. There's a lot to it. But like we do in Financial Intelligence Hub, is to make these things simple and practical. And that's what I've just broken down into this top 6 checks you need to watch out for before you invest. That's your savings, or before you reinvest that your money if you have recovered it. Please, as we round up this year, you don't want to lock in your money into an investment that will take away your peace and your happiness, take away your health. You don't want that. So it is important for you to ensure that you have checked all of this out. It may be your uncle, it may be your brother, it may be your sister, it may be your close friend approaching you with great business ideas, great business opportunities, great initiatives. It may be somebody close to you or somebody not even related to you. Watch out. Don't make decisions out of bias or emotion. Money does not respect emotion. So if you invest it wrongly, it's basbos. There is no two way about it. You also lose it. You've lost it for life. Yeah, it's gone, it's gone. So before you invest into any business or any company, Instagram vendors or wherever, think carefully. Ensure you've checked out, you've ticked these 6 things, at least at the minimum. Of course, everything I've said here does not constitute a professional advice in any way. Please take note of that. Does not constitute any form of professional advice. Please seek guidance from professionals, from those who are more experienced before you go ahead in making any investment decisions. What I've said here, everything I've mentioned about is my personal opinion and does not constitute any form of professional advice. Please. I actually have to say that. So investment success is not about luck. It's about wisdom. At least do your own part by doing your own research and due diligence before you put in your money into that idea, into that business opportunity, into that project. Do your research first. Don't count on luck. Don't count luck work for those that have also done their part. Play their part. I hope I've been able to provide some helpful tips on what to look out for before you make your money travel into some of those investments. Just to be clear, there are businesses that might also be worth investing in even though they don't have track records, even though they are loss making. And that is why we have startups. That is why we have businesses that have even been making losses for years but they are still in business. There's a reason. And then you can only know the reason if you have done your research. You can only know the reason if you have asked the right question. You can only know if this is still a good deal if you've done all the necessary checks. Because there are people who buy a business that is failing and they turn it around and they delivered great returns for them. Of course, we have business like that as well. But they were able to do that because they knew where the problem of the business is and they know how to turn it around. So that is not to say that what you should only be looking out for is businesses or projects or ideas that are already skyrocketing. No. You are familiar with the popular saying that says, the higher the risk, the higher the reward. But which means that there are businesses that may not have that reputation, that may not be at the level some other big companies have. And because of that, their risk is high. But if you do your research, if you do your due diligence very well, and you feel this is still a good deal to get into, because I believe that in 2, 3, 4, 5 years' time, things can turn around for this business. Of course, the reward will pay off because you've been able to do your research, you've been able to do your due diligence about the company, you've been able to ask the right questions, and you've gotten your answers, and you are able to proceed with that decisions with every information you have available. You know what to do. That helps you to manage your expectations from that business. It helps you to know what the company is going to be using your money for and when you are likely to get back your money, both your capital and your return. So everything revolves around you understanding, and every other thing flows along. Because you cannot ask every other questions if you don't understand. You can only ask subsequent questions from the place of understanding. If you don't understand, you cannot ask further questions. So I hope today's episode has been helpful. The next episode is going to be one of my best episodes for this year, and I can't wait to release it. I would like to request that you please like, share, and subscribe to our channels. Please let's share this. Let's spread the gospel of financial freedom. Let's share this message with our loved ones, our friends. Let them hear this. Let them hear this. I'm sure they will thank you. Please subscribe. Please subscribe. Our record shows that only 15% of people have subscribed, even though there are more people watching this video. Can I please ask that you please subscribe to our channels? It's just FinIntelligence Hub. We're on YouTube, we're on LinkedIn, we're on TikTok, we're on WhatsApp channel, everywhere. Just look at the bio section and you'll find our links there to all our various channels. Thank you very much. I look forward to seeing you in my next episode. I remain your host, Sheye. See you next time. Cheers.